Can you share just one with us?
Sure.
One story where, you know, changing people's entity structure led to major tax savings.
Yeah. Okay. We had a client that came to us. Both the husband and the wife owned businesses. Neither one of them were S corps, and they were paying the full amount of self-employment tax. So we we changed them to S corps immediately. That saved them about. And these were businesses where they had to file like, they weren't like partners in on the business, so they each had to calculate their self-employment tax limits individually. So they each saved about $28,000 each on self-employment tax. That's about 56,000. Then they weren't doing any other planning strategies either. So we did an Augusta rule plan where we rented their house to their business for board meetings. We could only do that one time, one set of Augusta meetings, because it's just one house and you can only rent your house 14 times. So if you rented it 14 times to his business, you couldn't also rent it 14 times to her business. But their house, the comps were around $2,500 per meeting. So they had, let's see, 2,500 times 14, about $30,000 of deductions just out of thin air for doing nothing different than they're already doing, just hiring us to do a tax plan. And we did all the documentation for these board meetings on these certain days and who was there and what they talked about. And we document all that for you. We don't let the clients screw that up and not get the documentation right. We just do all that. And then they each had an accountable plan because they had his and her offices at home. So there's a way to allocate the costs so that S corps don't have home offices, but S corps can reimburse the individual for the cost of that home office. And there's a way to allocate that that's much better than like the old home office rules that a lot of people know about for self-employed people. So we do this under what's called an accountable reimbursable plan. So now they have two accountable reimbursable plans. One Augusta strategy where they rent the home to the business. In this case, like her business did about half of them, his business did about half of them. And then each one saved on the self-employment tax. And then her business started doing really well. So more money than they needed to live on. So in addition, and we did 401ks at both businesses. And then in addition to the 401k in her business, we also did a defined benefit pension plan. And I mean, they saved like, let's see, about 56 on the S corps, about 5,000 on that first Augusta plan, about 10,000 from the two accountables, 61, 71, um, about 15,000 on the 401ks, and then they were saving about 85,000 that first year, recurring savings. And then it was in the second year that we did the defined benefit pension plan, and she started putting in about $150,000 a year into that. And that was saving about another $30,000 of tax savings. Now that the pension plan and the 401k, that's deferral because someday they're going to take that out in retirement. That's taxable. But the other stuff is just permanent savings that never reverses.
That's amazing. That's like working with experts makes such a
Yeah,
difference.
they were so
It's
happy. Their huge regret was that they didn't meet us earlier.